In the U.S. stock market, this asset class managed to harbor an estimated figure of $598 billion in 2023. Since being born in 1993, these assets have only seen steady growth over the years and are promised to grow even more in the coming time. I am talking about exchange-traded funds, more popularly known as ETFs. The best way to explain an ETF would be this example by finance YouTuber Joshua Mayo.
One single ETF can hold multiple stocks or bonds or commodities or a mixture of all of it inside of one single ETF. Just like a farmer holds multiple eggs in one basket, so a single ETF can hold multiple stocks, bonds, and other securities in one basket.
Welcome to the School of Smart Ideas. This is the ultimate destination for financial empowerment. Here, we decode the secrets to smart hustling and clever investing. So hit subscribe, ring that notification bell, and let's build wealth, one strategic move at a time. An ETF in its nature is not very different from mutual funds. They give you access to a well-diversified portfolio to invest in without having to buy each asset individually. But ETFs bear features that make them more convenient to trade with. Features like cost efficiency. ETFs incur a much lower fee thanks to their passive growth nature. ETFs follow a preset path by copying the performance of a specific group of investments, keeping the management of ETFs simple and hence the low fee. Flexibility in trading. ETFs trade on all stock exchanges throughout the trading day, just like individual stocks. This flexibility allows investors to buy or sell shares at market prices whenever the market is open. In contrast, mutual funds are priced and traded only at the end of the trading day, after their net value is already calculated. Lower investment minimums. ETFs can be bought in increments of a single share, making them accessible to novice investors with smaller budgets. Mutual funds, on the other hand, often require a minimum initial investment, which can be a barrier for some beginners. The ability to buy ETFs in smaller quantities makes them more appealing for those starting with limited funds. Tax efficiency. ETFs are tax-friendly investments. When you sell your shares and make a profit, you only pay taxes on that profit. With mutual funds, because of how they're set up, you might end up paying more taxes because of things the fund managers do inside the fund. ETFs make it simpler and often mean less tax hassle for you. Intraday trading and liquidity. ETF trading is more flexible and quicker. You can trade in them during active market hours, and they are quite easy to trade with as they are on all major stock exchanges. But that is not the same case for mutual funds, as they open up only once a day after the stock market closes, and one investor's decision has a significant impact on the fund's price. So are all ETFs good and safe? Unfortunately, no. There are some factors that one has to consider while searching for ETFs that would satisfy their risk appetite. Underlying assets. You need to take a closer look at the assets that make up the ETF. Some might track the progress of well-established indexes, while others may focus on some more niche and riskier assets. So pick according to what seems more digestible for you. Liquidity. Good ETFs need to have high liquidity, which means they need to be easy to trade with, which ensures higher selling prices and better prices to buy at.
So, what is liquidity, and why does it matter to investors? Liquidity is the ability to buy or sell your investment quickly and easily. Importantly, with ETFs, this liquidity typically occurs at a price that reflects the fair value of the investment. The level of liquidity in an investment is a key factor to consider when making an investment. The more liquid an investment, the better, as it means you have easily tradable assets in your portfolio that you can buy and sell when you want to.
Issuer reputation. Take into consideration the reputation of the companies or financial institutions that issue the ETF to the stock market. Sticking to well-reputed issuers will help you avoid any roadblocks going ahead. Performance history. Study the past performance of an ETF, understand how it performed under different market conditions. But keep in mind that past performance doesn't guarantee future results, but can still provide insights.
Does past performance indicate future results? And of course, they're talking about this category has been doing well and that category is doing badly, and does that mean it'll continue the same way, or the market as a whole continue the same way? The answer is no, and it's very simply because the fact is what the market is about always is about future surprises. things that people don't commonly understand now that will surprise them in the future, for good or for bad.
These are some of the biggest indicators of the reliability of an ETF, so we urge you to study carefully before you choose to invest, and make sure to subscribe to this channel to gain more knowledge about the workings of stocks and ETFs. Feeling ready to invest in some money-making ETFs? Well, first we suggest you take the time to research and educate yourself about the workings and features of ETFs. You can also check out our previous videos where we teach a great deal more about ETFs. Choose a reliable brokerage. Select a reputable brokerage platform that suits your needs. We would suggest that you check out Robinhood. It is one of the biggest commission-free trading platforms in the world, with over 22 million investors. It also consists of a large selection of ETFs such as index ETFs, commodities ETFs, real estate ETFs, and others. You may check out Pepperstone as well. With ETFs being traded on the open market, speed is your best friend. Pepperstone offers some of the fastest execution speeds and an innovative, easy-to-use interface. And one more suggested platform would be Qtrade. With the ease of opening an account and a whole bunch of high-quality educational tools, Qtrade is a great option for novice investors. After you open your brokerage account, deposit enough funds to cover your desired ETF investment. Read all the attached terms and conditions carefully and place the order. Congratulations! You've just bought your first ETF now. Regularly monitor your investments and stay informed about market trends. Subscribe to this channel and make informed investment decisions.